Good morning, Brew Daily Show. I'm Neal Fryman.
And I'm Toby Howell.
Today, Trump goes full Hammurabi's code, pledging an eye for an eye with reciprocal tariffs on the countries of the world.
Then RFK Jr. was confirmed as the nation's top health official, while everyone from cereal makers to drug makers are bracing for change. It's Friday, February 14th. Happy Valentine's Day, and let's ride.
Love is in the air this Valentine's Day, and whether you're headed on a third date or going strong 20 years with your partner, here's a little tip that could add a lot of intimacy to your relationship. Kiss for 6 seconds each day. Kissing for 6 seconds, a method pioneered by clinical psychologists John and Julie Gottman, is the threshold at which your body will release oxytocin, the hormone that calms the fear center of the brain, builds trust in a relationship, and is the same one believed to be responsible for a baby bonding with its mother. They developed this intentional intimacy concept after studying more than 3,000 couples over 30 years. Don't want to smooch each day? Maybe your lips are a little cracked. Another scientist found that a 20-second hug is pretty much the equivalent.
Okay, lots of thoughts here, Neal. First, are there compounding returns? If 6 seconds of kiss and 20 seconds of hug release X amount of oxytocin, then would a 60-second kiss and a 200-second hug release 10 times that amount? If I kiss someone for 6 hours, am I going to be the happiest person on earth? That was my first question.
Probably be a little hungry.
You would probably get a little hungry by the end. But also, what other activities derive a similar amount of chemical satisfaction? I was thinking maybe a 45-second firm handshake might get it done. Or, 2 hours worth of high fives, just little bursts of oxytocin here and there. But thank you for sharing these intimacy plans on this day dedicated to love. I think I might try it out later this evening with my girlfriend. Now, a word from our sponsor, Wise Business. Sometimes running an international business just feels like being stuck in a giant maze.
You're trying to find the exit, but just keep hitting dead ends. Then you run into a minotaur, aka hidden fees.
When Theseus entered the labyrinth, he unspooled strings so he could find his way back. And that's where Wise Business comes in.
They're not even your spool of string. Wise just eliminates the maze altogether. You can pay in multiple currencies and get paid fast like a local business.
No surprise fees, no confusing exchange rates, and no minotaurs.
So if you want to avoid getting lost in international payment purgatory, visit wise.com/business. That's wise.com/business.
Remember all those other tariffs the Trump administration has talked about? Small potatoes. Yesterday, the president unveiled what he deemed the big one, a set of reciprocal duties meant to even out trade deficits America has with other countries. Federal agencies are taking it slow, initially conducting studies on how to update tariffs before implementing them in April, but nearly every country that conducts international trade will likely be affected, especially the likes of India, Japan, and the EU. It's time to be reciprocal. You'll be hearing that word a lot, Trump said earlier this week. If they charge us, we charge them. This reciprocal approach extends the U.S.'s trade wars to far more countries outside of just China, but we'll have to wait and see if the strategy is to try and extract concessions, as Trump has been known to do, or a legitimate attempt to raise import barriers and non-tax revenue in the process. Either way, implementing a new tariff code is a massive undertaking that will require reevaluating hundreds of countries' current policies in less than 2 months. Neal, the big one is here.
And the big spreadsheet is coming. I mean, if you think you're good with Excel, the Trump administration probably wants to hire you because this is about to be the most gnarly spreadsheet ever. Imagine going to a tailor and getting a custom suit for every single country. That's exactly what is about to happen. And it's not just tariffs, because say, Toby, I'm trading with you and you have 10% tariffs and I have 2% tariffs. So I say, okay, reciprocal, I will bump my tariffs up to 10%. No, there was a huge Clayton Kershaw level curveball here, which is that it applies to more trade barriers than just tariffs. They want to go after subsidies, regulations, value-added taxes, exchange rates, and other factors, all that amount to trade barriers on the United States. And that will go into their calculation that what is deemed reciprocal. So yeah, this is not going to happen within weeks or months. So they're hitting the books and figuring out what a reciprocal relationship actually looks like.
Let's take a step back and think about what the current system is and why Trump wants to remake it. Remember, we are currently in a global trade environment. Following World War II, a lot of the most powerful economies and countries in the world signed this thing called the General Agreement on Tariffs and Trades, GATT. That ushered in this era of, scratching each other's back. The agreement was eventually turned into and absorbed by the World Trade Organization. So for a long time, this word tariff has been kind of this ugly word because you wanted to supercharge global trade. You wanted to open up a lot of these pathways. But now the Trump administration thinks that higher tariffs is this pathway towards bringing manufacturing back to the United States and also potentially boosting revenue that you're going to lose if he implements these tax cuts. So there's been a lot of criticism of these plans, obviously, but this is kind of what Trump has been pushing for. He wants to, even the playing field on the global level, which really does upend what the system we've been operating under for, since post-World War II.
Yeah, and economists would push back on Trump's reciprocal pushes and say, look, the reason that tariff rates differ is because different countries are really good at making different things, and we trade with each other so that, 1 + 1 = 3. And a good example of this is coffee. Brazil is great at making coffee beans. They are the largest exporter in the world. The United States, not so good at making coffee beans. Our climate is just not acclimated to that. So Brazil has a tariff on green coffee beans of 9% because they have a big domestic industry there. They want to protect it. So they are putting tariffs on coffee beans coming into their country. The United States, we don't make any coffee beans, so we have 0% tariffs, and that is to have cheaper coffee, because if we put tariffs on coffee, we import all of them essentially, so it'll just raise prices for consumers. And then on the converse of that, let's look at an industry like pickup trucks. The United States is really good at making pickup trucks. If you haven't noticed, just go to your local mall and look at all the cars in the parking lot. Japan makes good cars, but they aren't good at making pickup trucks. So Japan has a 0% tariff on pickup trucks coming from the United States because they want their consumers to have as cheap pickup trucks as possible. The U.S. has a tariff of 25% on pickup trucks from Japan because we have a local big industry here that we want to protect. So that's sort of how it's shaken out over the past few decades. This is the reason why we have differing trade and tariff rates, and now it looks like that is going to be shaken up.
And one of the other final critiques here is that if you insist that we are going to match your tariff rate, we're going to be reciprocal with whatever you're charging us, we charge you, then you basically are handing over your entire trade strategy to other nations because they say, oh, you're going to match us. We're going to jack imports up to, or the tariff rate up to 20%. Now you have to jack it up to 20%. So you're like almost taking your agency away when dictating how you want to deal with other countries. So yeah, there is just widely varying tariff rates depending on which country you're even talking about. I mean, India has tariffs of 60% on automobiles and flowers, 50% on apples, corn, and motorcycles. These are domestic industries that they want to protect. So let's go back to this spreadsheet. It is going to be quite this undertaking because there's just so many different industries, so many different countries that you have to sort through and, come up with a cohesive plan.
And it could also be a negotiating tactic. The EU has already said that they would lower tariffs on U.S. exports in order to head off this trade war. They have 10% tariffs on U.S. cars right now. They said they would lower that to 2.5% to get ahead of this, and that may be what Trump is ultimately after anyway. The United States has a new top health official, Robert F. Kennedy Jr., a longtime environmental lawyer and former presidential candidate, was confirmed by the Senate yesterday to become the Secretary of Health and Human Services. His anti-establishment agenda to make America healthy again could shake up the $4 trillion healthcare industry and the food sector, areas that are now under his expansive purview. All Democrats voted no on Kennedy, while all Republicans voted yes, except for one, Senator Mitch McConnell. McConnell, who survived polio when he was a child, said he couldn't endorse Kennedy over his previous criticisms of vaccines. In my lifetime, McConnell said, I've watched vaccines save millions of lives from devastating diseases across America and around the world. I will not condone the relitigation of proven cures, and neither will millions of Americans who credit their survival and quality of life to scientific miracles. So, now that RFK is in charge, despite McConnell's no vote, of the nation's vast health and food apparatus, including the FDA and the CDC, what is he going to do? We don't know quite yet, but the business world is bracing for impact. In the past, he's railed against Big Pharma for over-medicating Americans, Big Food for creating an obesity crisis, and Big Ag for putting pesticides and seed oils in diets.
Yeah, I think there are a lot of phones ringing off the hook in Washington right now who are trying to figure out what to do under this new kind of purview that RFK Jr. has. Let's start with vaccine makers because, you know, that's been a very hot button topic under Kennedy's ideas there have been, you know, pretty controversial. Remember, he called the COVID-19 shot that Pfizer produced one of the deadliest vaccines ever made. He's walked back some of those comments since, but a lot of these companies that still derive a lot of revenue from vaccines are nervous right now. I mean, Merck has an HPV shot. That's this company's second best-selling product. Moderna's entire business is wrapped up in forming various vaccines. And it's not just manufacturers that are potentially at risk here, too. CVS said in a recent annual report that regulatory changes or consumer sentiment shift for immunizations may hurt demand at some of its stores. So if you are a healthcare company that does rely on vaccines as one of your main streams of revenue, then you are definitely a little nervous that RFK Jr. is now in charge.
And the cost of public health. I mean, just as we're talking right now, there is a measles outbreak in West Texas. 24 people have been infected. Some have been hospitalized, and all of them were not vaccinated with MMR, the measles, mumps, and rubella vaccine. And then another interesting angle here for the pharmaceutical company, a agenda item of RFK that has won support across the political spectrum, which we should add, many of his ideas have gained bipartisan support, going after big food, saying that they put profits over the health of Americans. Bernie Sanders was like, yeah, dude, I 100% agree with you. One of them, interestingly, for the pharmaceutical industry is that he wants to ban TV advertising for pharmaceutical companies. Elon Musk is on board with this. And this would shake up TV and pharma, the pharma industry. You know, anyone who's watched TV recently knows that they spend a ton of money on advertising. They are on track to spend over $5 billion alone on national television as advertisements this year. Of 5 popular nightly news shows on major networks last week, advertisements from the maker of prescription and over-the-counter drugs accounted for half of ad spending. So this is going to run up against a lot of opposition from industry, but it's just another, big idea that RFK has.
And then finally, one other idea that we should speak about is that RFK is not a fan of weight loss drugs. Wegovy, Ozempic, the GLP-1 class of drugs that has absolutely taken the world by storm. He said, when I'm working in the next administration, I will address our sick food system. Instead, he wants to address, the root cause rather than something papering over it. And that could set up a fight with one of Trump's other top advisors, Elon Musk. Elon Musk has been extremely supportive of these weight loss drugs. He went as far as to say nothing would do more to improve the health, lifespan, and quality of life for Americans than making GLP-1 drugs super low cost to the public. So that is a potential point of friction that we could see develop between two of Trump's top lieutenants. Robinhood, the trading platform best known for the meme stock boom, is growing up. It reported earnings earlier this week, and it was all highlights. The company posted its first ever annual profit, and revenue more than doubled. It's been quite the turnaround. After it went public, Robinhood withered away, losing 80% of its IPO market cap, but it staged a huge comeback since, with its shares more than quadrupling over the past year. How did it right the ship? Firstly, by attracting more serious investors away from competitors like Fidelity and Charles Schwab. CEO Vlad Tenev said his company finished the fourth quarter with $1.3 billion in net transfers, more than any other brokerage. it also rode a crypto trading tsunami. Its crypto-based revenue jumped an insane 700% year over year to reach $358 million. Neal, shares finished up another 14% yesterday. Robinhood and its merry band of crypto degens is cooking.
Robinhood has certainly benefited from the hype around crypto. When people are trading crypto, when people are trading stocks, when there's volatility, Robinhood and its peers will do well. And it hasn't just been Robinhood. Coinbase reported a 100, which is the largest crypto trading platform, reported a 130% rise in revenue just yesterday. Fidelity, Schwab are all raking it in. So when Bitcoin goes over $100,000, these companies are going to benefit. But you could say that Robinhood has made certain tactful changes that puts it in a really good position to benefit now to the point where its market cap is over $50 billion. It's been releasing a number of financial products, crypto and other, to make its platform more sticky, get more people coming over from other platforms, get more money on Robinhood itself. Rolled out a subscription offering called Gold, which it said has 2.6 million people right now signed up, paying every single month for advanced features. It also rolled out a credit card that has a very long wait list. So it's been pedal to the metal for Robinhood, and they're not even close to done.
Right. There's kind of two angles you can look at here. One, it rode this animal spirits wave really well. Customers traded $14 billion in crypto in the third quarter on its platform. Sounds like a lot. You go to the fourth quarter, that number jumps to $71 billion. So just a massive uptick in crypto trading. But you're right. A lot of the reason why analysts are a little bit more bullish on it is that Robinhood is maturing as a company. It has these very sober offerings. Like, it offers retirement accounts now. It has that credit card that it launched. And also those funded accounts that are subscribing to its Gold service. That is a very stable form of revenue that doesn't, wildly fluctuate alongside the crypto market. So that's why analysts were like, all of a sudden, Robinhood is kind of looking like a very well-positioned company. It does have a long way to go to reach the big boys that have trillions of dollars in assets on their platform. But right now, Robinhood is certainly, aging gracefully into its teenage years.
And we'll see whether in those teenage years it rolls into events contracts, which is those prediction markets that have become so big recently with Polymarket and Kalshi. Robinhood did roll them out ahead of the presidential election. They tried to do it for the Super Bowl, but the regulator stepped in and said, no, please take that off. So they did. But, a name like Robinhood getting into events contracts, which is those things where you can just bet on an event to happen outside of sports. It's like sports gambling, but for just like things happening in the world. We'll see if they are able to take these prediction markets mainstream.
It sounds like the event contracts are pricing in a 100% chance of us going to break right now.
Welcome to Stock of the Week, Dog of the Week, the segment where Toby and I pick one stock that won Best in Show and another that needs to work harder for its treat. I won the pre-show harmonizing contest. Toby, you were just a little flat on that high G, so I get to go first. And my stock of the week is DoorDash, and not just because it came up clutch during my Super Bowl party. The stock is up 5% this week after the delivery giant reported its first full year of profitability ever. Revenue grew 25% during DoorDash's fourth quarter, while it posted net income of $141 million compared to a loss of $150 million a year ago. There was a time that DoorDash being profitable seemed as remote as Toby shooting under par. It racked up hundreds of millions of losses, spending gobs on marketing, discounts, operations, and there were plenty of haters saying the economics of food delivery, a savagely competitive sector, would never work out. But DoorDash has managed to build a healthy business and become the dominant player in the U.S. restaurant delivery space, commanding 2/3 of the market and distancing itself from Uber Eats and Grubhub. Oh, and the Super Bowl was pretty good for it too. DoorDash said its delivery drivers earned more than $50 million during the game this year, up from $43 million last year, from all you chicken wing ordering freaks.
People like having personal chauffeurs for their burritos. Total orders are now up 735% over the past 5 years. It's not just that DoorDash is executing, which it has been very well for a long time now. It's also that there's just a lot of demand for food delivery in general. Just look at the results from Uber's delivery segment last week. It also beat expectations. DoorDash is a much larger player, though. It controls 2/3 of the U.S. meal delivery market. That is triple the share that Uber Eats has. So I am curious to see how it does going forward because these two companies have been kind of avoiding each other for most of their early lifetime. DoorDash initially went very hard, focused on suburbs. Uber Eats, meanwhile, went very hard and focused on urban areas. So now the two are mixing a little bit more. They're stepping into each other's territory. So I do think we might see another, sort of food delivery war start to cook up. But DoorDash is cooking.
And I think with its first profitable year, it is a signal of the maturation of the gig economy, which I mentioned. Few thought that the economics would ultimately work out for these type of companies, but Lyft also reported its first profitable year ever in 2024. Airbnb and Uber also reported their first profitable years in 2023. Next up is Instacart, which is reporting later in this month, and it could report its first profitable year ever. So these companies that rely on independent contractors that have been, embroiled in labor negotiations and criticized for not paying drivers enough, but also just not being profitable enterprises are really turning a corner here, When were these companies started? 15 years after they started.
In the ZIRP era, with those 0% interest rates definitely helped start them. So a lot of people are saying they have these enduring moats because we're not going to see an era like that to raise capital again. So yeah,
I do miss the discounts.
The discounts were incredible. The millennial subsidized lifestyle. My dog of the week is Reddit. On the surface, Reddit's earnings this week were pretty solid. 101 million daily active users in Q4, up 39% year over year, and a solid beat on revenue expectations should have made investors happy. But instead, shares fell more than 15% on Wednesday. The culprit, according to CEO Steve Huffman, Google tweaked its algorithm, which led to fewer Reddit posts hitting that SEO sweet spot to get a boost in search results. That means when you search for something like Severance Dead Seal Explained, Reddit posts might come up a little lower in Google's pecking order. Huffman tried to assuage investors' fear during the earnings call, explaining that Google's algorithm changes take place 2 times a year and that this one is not the first and not the last. Still, an annoying development for a company whose shares had been up 23% so far in 2025.
The Reddit Google relationship is pretty interesting. You could call them frenemies, you could call it symbiotic, but Reddit relies on Google for so much of its traffic. 55% of all of its users are what they call logged out users, which are essentially people who come in from a Google search and they aren't logged in to the platform. Those are most of the people that, travel, that scroll through Reddit every single day. At the same time, Google needs Reddit as well. It's paying it $60 million for it to help train its AI, large language models. So you have this very interesting relationship between Google and Reddit. At the same time, they are also competing against each other. Reddit is also has released this AI search tool that, ostensibly would be what Google is for. So it looks like Google's little algorithm change. Reddit relies so much on Google that Google's tiny algorithm tweaks, which it does a couple times each year, threw a hammer in its earnings and sent its stock tumbling.
Yeah, Steve Huffman, the CEO of Reddit, said that this one was particularly interesting because they saw this immediate swing downwards, but then right after they saw recovery towards the end of the quarter. So it is, sometimes you live and die by these algorithmic changes, but they are pretty adept at navigating them at this point. And it is definitely a symbiotic relationship because most people just treat Google as almost like a wrapper to get to Reddit search results. They're like, this is the only place I'm finding real verifiable results, especially in the age of AI. So very interesting to see the two kind of dance around each other. They both need each other, but also one changes affects the other pretty more intensely than you'd expect. Now let's sprint to the finish with some more headlines you may have missed. I hope you were productive from January 19th until now because TikTok is back and available to download in both the Apple and Google app stores as of yesterday. Remember, after a law was passed by Congress and upheld by the Supreme Court, the tech giants took the app down back in January so as not to run afoul of the legislation and rack up huge fines in the process. But yesterday, just about a month after it was banned, U.S. Attorney General Pam Bondi sent a letter to Apple and Google, pinky promising that they won't be punished for hosting the app. Taking the Trump administration at their word, the two decided to bring the app back and now we can all swipe away again as Trump tries to work out a deal by early April to address the national security concerns around the app's Chinese ownership.
I wonder what this letter said, because previously the DOJ said they wouldn't prosecute TikTok, Apple or Google for allowing TikTok on their stores, but they said, I don't think it's worth it because you have this law passed by Congress which said don't do that or we will fine you $1 bazillion, $5,000 per user, and then you have the Trump administration that says don't listen to them. So I don't know what this letter said, but apparently it was convincing. TikTok is back on these app stores, which is huge for its continued relevance and growth in the United States.
Donald Trump Jr. wants to see just how fast roided-up athletes can run and is putting his money up to find out. Yesterday, the president's son announced a significant investment in the Enhanced Games through his venture capital firm 1789 Capital. The Enhanced Games, best described as the Steroid Olympics, are a multi-sport event that will allow athletes to compete while using performance-enhancing drugs. Trump Jr. views the Enhanced Games not as a sideshow project, but a disruptive force in sports, challenging established norms and offering up what he calls real competition, real freedom, and real records being smashed. This is about excellence, innovation, and American dominance on the world stage, something the MAGA movement is all about.
I just have to say there's only one athlete that has signed up so far for the Enhanced Games, and that's an Australian former Olympic team member, James Magnuson. There's no date, there's no location. They seem to have enough capital. This is tens of millions of dollars, and another investor is Peter Thiel, which shows you sort of the political, who is a longtime Trump supporter, and shows you the political persuasion of the Enhanced Games. I'm just curious whether this thing is going to happen at all.
I think the logic, too, is that if you can experiment and try to make these athletes superhuman, potentially you could pass down some of those findings to overall public health. Balaji Srinivasan is another big investor. He said that technology will make athletes superhuman, then it will make everyone superhuman. That's why I was the first investor in Enhanced Game, to improve human health for all of us. So that's potentially another thread that you can trace back through these investments, that they do want to pass on these findings to, the broader public health sector.
And the International Olympic Committee, the Biden administration, some other organizations have come out and said, this is not a good idea,
Not
guys.
a good idea.
Okay, if you get frustrated with your Gen Z employees, you can commiserate with Giancarlo Romano. The alleged mafia don of the Sicilian crime syndicate Cosa Nostra was heard on wiretaps complaining about the sorry state of new recruits. He grumbled that these days the caliber of the youngins was, quote, miserable, and reminisced about Vito Corleone and the power he wielded in The Godfather, which was based on the Cosa Nostra. Romano was heard saying, if you watch The Godfather, the connections he had, he was very influential because of the power that he built at a political level. But us, what can we do? Toby, these kids and their obsession with work-life balance.
This organization is not in a great spot right now, but I think I know how to fix the mafia. Step 1, call everyone back to in-person work. None of this remote work stuff. Step 2, layoffs of the bottom 5% of employees. Yeah, that's right. Institute performance-based layoffs. Step 3, Mafia AI, improve efficiency with internal AI tools. Step 4, movie night. Everyone watches Godfather every single Friday. Step 5, profit, I guess. I think that's how you reform the mafia from top to bottom.
Okay, let's wrap it up there. Thanks so much for starting your morning with us, and have a wonderful Friday. Quick programming note, since Monday is President's Day, we will be off the daily news grind, but we taped a special holiday episode, and it's a fun one, so be sure to tune in. That is Monday morning. For any questions, comments, or feedback, send an email to morningbrewdaily@morningbrew.com. And if you're enjoying the show, share it with a friend, family member, or coworker. Toby, who should everyone listening share it with today?
Forgot to get a Valentine's Day card. I got you, kings and queens. Simply send your boo this episode and write, roses are red, violets are blue. This episode of Morning Brew Daily is best listened to with you. Aww.
Let's roll the credits. Emily Milliron is our executive producer. Raymond Lute is our producer. Olivia Graham is our associate producer. Lonnie Fiskus is our technical director. Garrett Peck is on audio. Hair and makeup is down at the Eagles parade today. Keep it classy. Devin Emery is our chief content officer, and our show is a production of Morning Brew.
Great show today, Neal. I wish you all well.